So friends, today we will understand what is systematic risk and unsystematic risk practically, conceptually relating to stock market examples. So we have covered this concept in our class, what is systematic risk and unsystematic risk. So total risk can be divided into two parts. Total risk of any company can be divided into two parts. One is systematic risk and another is unsystematic risk. So what is systematic risk? Systematic risk can never be controlled by the company, can never be controlled or eliminated. Systematic risk can never be controlled or eliminated, and unsystematic risk can be controlled or eliminated. Let's take example of corona. During corona shutdown pandemic time, pandemic peak, all the industries, all the factories, all other outlets were closed. So nobody could control it. Not a single company could have controlled this pandemic. This is not in their hand. So it cannot be controlled or eliminated by the company. In the same manner, there are some risks which can be controlled by the company. Let's say labor problem, strike, lockouts. So labor problem, company is not able to pay salary, company is not able to manufacture good products. So these are company related problem. Company is not able to hire good manager, company good manager resigned from the company, company had some audit problem, company's balance sheet is not reflecting true pictures. These are all risks related to a company. Fine sir, so you have understood what is systematic risk. Systematic risk cannot be eliminated or controlled by a single company, and this risk can be controlled or eliminated. So this is country or sector specific risk. Corona was entire country risk, and this is company related risk. This is non-diversifiable. We cannot reduce such risk. This is diversifiable. It cannot be avoided. It can be avoided. Examples: terrorist strike, surgical strike, political instability, interest rate RBI policy, inflation, dollar rupee movement, GDP slowdown, taxation policy. These all are systematic risks which cannot be controlled by a particular company. Labor strike, delay in payment of salary, key manager resignation. These are unsystematic risks which can be controlled by the company. Now let's understand it with live examples, with real life stock market case study examples. Maruti recalls 63,000 units. Means there were some fault in Maruti parts, and Maruti recalled those cars which have faults in it. So this is a negative news for Maruti. So Maruti share price will be down, or Tata Motors share price will be down, or entire market will be down. Only Maruti share price will be down. So you can see Maruti share price is down. This is an old screen which I am showing you. This is the image which I have captured at that time when this news was a breaking news. Market do not like war situation. If there is any tension in the market like US-Iran tension, so our Sensex and Nifty is falling. So market never like war like situation. Sensex Nifty decline with global markets as US-Iran tension escalate. Sensex drops over 162 points on US-Iran tension. Sensex drops 162 points. So this is unsystematic risk or systematic risk. Right now I have shown you two examples. This is unsystematic risk. Maruti can control this type of risk. This is unsystematic risk. Maruti can control this type of problem. And this is systematic risk. Nobody can control it. No company at least can control it. Fine sir. Bharti Airtel loses 5.7 crore mobile customers. So this is Bharti Airtel problem. This is not Reliance Jio problem. Fine. Coronavirus triggers collapse in garment industry. Whole garment industry was at loss due to coronavirus. This is systematic risk. This is systematic risk. Loss due to flood. This is again systematic risk. Nobody can control all these risks. Kodak will lay off 425 employees after reporting millions of losses. This is Kodak problem. This is unsystematic risk. Nokia post $1.2 billion loss as phone sales tumble. This is unsystematic risk. SEBI fines promoters of PC jewelers. This is unsystematic risk. PC jewelers indulged in some wrongful act and SEBI punished PC jewelers. This is unsystematic risk. This is the problem of PC jewelers only. This is not the problem of Titan or not the problem of any other jewelry company. It is the problem of PC jewelers alone. Jet Airways to go under insolvency. It is a problem of Jet Airways, unsystematic risk. Terrorist attack, systematic risk. Tsunami, this is systematic risk. Earthquake, this is systematic risk. Flood, IT company suffers $60 million loss due to Chennai flood. Systematic risk. So many examples I have given you. 10 Chennai company based companies whose stock fell after heavy rains. Heavy rain, systematic risk. Fire in aeroplane. This is unsystematic risk. That aeroplane company will fall. Fine, sir. Tata Nano car didn't met to street expectation. Nano, you must have heard the name Nano. There was a Nano car. Nowadays there were news that Nano car is catching fire. So it was dangerous to ride Nano car. So Tata had to shut down the entire Nano production. This is unsystematic risk. Unsystematic risk. Manpasand beverages GST fraud. They did some GST fraud. Manpasand beverages. It is unsystematic risk. Manpasand fell 53% in 5 days. Unsystematic risk. You can see the share chart. Unsystematic risk. PC Jewelers share price fall over 7%. Unsystematic risk. PC Jewelers hits all time low. Unsystematic risk. You can see PC Jewelers all time low, unsystematic risk. These all are old screenshot. Fine, sir. So you have seen all such kind of unsystematic and systematic risk. Fine, sir. One more news I am giving you. Infosys share price fell by 13% because the CEO of Infosys had resigned. So this is the problem of Infosys. This is not the problem of TCS or Wipro or SCL Tech. This is the problem of Infosys. So it is unsystematic risk. Unsystematic risk. Fine, sir. So unsystematic risk and systematic risk. Let's play some video to know the real market situation that happened at that time when the news broke out. So these are old videos but still relevant for you because you are new to the stock market. You must know each and every examples with video explanation. So hope you will enjoy it, and definitely you must be liking all these things which are being taught to you as a practical coverage. And definitely when you will be qualified, when you will face a new world, new practical world, you will be more prepared, you will be more confident to face the world of stock market, and finance job is for you because you are definitely very talented and you will definitely prove it with your marks and with your talent. Fine, sir.
Across to Mubina, the other stock in focus has been PC Jeweler. Mubina, what's the key takeaway?
Well, clearly the sheen in PC Jewelers is off, and how it's gone 75%. from its all-time high level, currently trading at a level of almost about 110 odd rupees. Of course, today the stock price has whipsawed considerably. In just the last 6 days, we've seen half of PC Jeweler really been eroded in terms of the stock price. We've lost about 18,000 crore rupees in market capitalization as well. Now, essentially the entire story behind PC Jewelers kick-started back when the connection with Vakrangi sort of surfaced, and since then PC Jewelers has been on a steady downtick. That is something that one must watch out for. Apart from that, another trigger for the stock has been Fidelity, which sold about a 46.8 lakh share stake that it had in the company. So it's reduced the stake to just about 7.04%. The other reason for the fall is the speculation over relations with Vakrangi, which I already flagged off. And one of the promoters seems to have gifted about a 2% stake that they owned to a relative. So there is a lot of contention and a lot of noise in relation to that news piece as well. We have connected with the promoter, with the CFO several times in the past, today as well, and they continue to maintain that it's business as usual for PC Jewelers. They have continued to open their stores. They have opened stores in April. They continue to open stores, or rather in March, they continue to open stores in April as well. In fact, they plan to open another 25 stores in 2018. The promoter and group continue to hold the stake in the company. They have announced their buyback, and more importantly, the CFO has also said that there has been no questioning or no sort of inquiries sent in by the CBI to the company, to the management either at this point of time. So essentially, they themselves are a bit perturbed by the reason because of which they are essentially seeing the stock price. If we look at the financials, the 5-year CAGR basis, the sales has been pretty healthy at 20%. Profits as well have grown 13%. So at this point of time, the fundamentals do not sound of any red flags. But of course, the next big trigger will be, like I said, the buyback and the board meeting to be held on the 25th of May. All eyes will be on that.
And Mubina, what's really interesting is, and I was just reading this before the show, we've seen the stock fall 83% nearly from the high point in January. But I want to just understand from you, is it correct the promoters have also made it clear that they're not going to participate in this buyback program?
Well, that's at least what reports are indicating at this point of time, that the promoters are not going to participate in the buyback. They have been holding about a 60% odd stake in the company, and it seems like the promoters will continue to do so. But of course, at this point of time, what has been notified to the exchanges is that the buyback is well on track. There's no plan to drop that, and they still do have sufficient cash on the books.
Then, in a huge setback for Anil Ambani's Reliance Communications, the NCLT has admitted an insolvency plea filed against the company. Ashwin Mohan joins us now with more details. Ashwin, how big a blow is this for Reliance Communications, and what impact will this have on the asset monetization drive?
This is clearly the biggest blow so far as Anil Ambani's efforts to revive RCom are concerned. We are given to understand that the National Company Law Tribunal in Mumbai has admitted an insolvency plea that has been filed against Reliance Communications. This insolvency plea has been filed by Ericsson's Indian unit, and Ericsson had in fact filed this insolvency plea alleging that RCom owed them dues of about 1,150 crore rupees. Now, keeping the entire concern around potential bankruptcy aside, what this order means is that this is definitely going to derail the entire sale process, the asset monetization process of RCom. RCom, remember, has struck an agreement to sell many of its wireless assets to RelJio. So this immediately puts a question mark on the entire sale process. RCom, on the other hand, had been very, very vehemently arguing before the NCLT that it should not trigger an insolvency because according to them, it's only a default that triggers insolvency and not a debt. In fact, they're also been arguing that if RCom enters insolvency proceedings, then the entire value of these wireless assets will further reduce. Clearly, RCom is going to appeal against this order at the higher forum, which is the NCLAT. It owes about 45,000 crore rupees to the lenders consortium. So we'll have to wait and watch to see how the NCLAT, in fact, which is the higher forum, responds, because a challenge to this order is certain.
Thanks, Ashwin, for that big update, and we'll wait and watch how RCom stock reacts to that, and definitely not in a positive way.
So it's definitely going to be a very, very difficult start. Let's see if there is permission, there is space to trade itself. 10% down, right? I think we're a distance from that.
Yeah.
God forbid, we don't want to get there. Okay, it's about 5%. So 420 gone, 430, 438 gone on the Nifty, 8,022, 8,005, 8,004, 8,000, oh no, 7,991, 7,979. This is going rather rapidly. It's gone below 8,000 and about 1,600, 1,700 gone on the Sensex. So that index is at 27,000, a distance from their 30,000 T-shirts. 27,140, 7,950 is gone on the Nifty. And in the Nifty Bank, about 1,500 is gone. So we are trading at 19,000 and change. 19,074, 19,060 thereabouts. So 19,000 looks clearly in danger. The mid-cap index, I think at its highest was over 20,000. Today that index is trading at about 11,900. So it's fallen through the 12,000 mark. Once again, getting back to the Nifty, I think 7,950 approximately is the average of the first minute trade. 8,000 didn't hold, so 7,950 I guess is the first trade on the Nifty. There is one stock in the green and oh no, even that went off. Power Grid was in the green, it is. Otherwise it's 49 on 50 in the red. Bharti Infratel 15%, Bajaj Finance, that is the important point. People rushing out where there is a little bit of money left. Bajaj Finance down 11.5%, ONGC, so all those PSUs which saw a little bit of green yesterday for some time, down 11%. ONGC, Yes Bank sees the first red take 10% off. Madhu Kapoor sold yesterday, we heard. IndusInd Bank down 8.5%, HCL Tech 10%. There was some news about one person in their Noida facility testing positive. Britannia 7%, Coal India 9%, Kotak Mahindra 9%. Kotak Mahindra fallen a further 9%, and now it is being challenged on whether it will be a four-figure stock. 1,064 on that stock. HDFC Bank is about 800 rupees, 812, 813. Maruti is down about 7%. It's a 4,900. It's gone through the 5,000 mark. I think I'll read only that much.
Yeah, but you know what, Lata, the more the clarifications, the bigger the fall. Bandhan Bank, just see that stock, 15%. Okay, now it's recovered to about 9%, but there's a big decline happening there. The market's taking some kind of support at 8,000. Make no mistake about that. And you know, the indications came from the futures. The futures, in fact, for start.